Imagine waking up every single month with an extra $100 hitting your account without having to lift a finger.
Come on! Yes!
That is the power of dividend investing. And in this video today, I'm going to show you exactly how you too can build a dividend portfolio that pays you $100 every single month. I'm going to show you step by step how you can do this even if you're just starting out with a couple $100. All I ask of you is if you please enjoy this type of content, please give this video a big thumbs up. It does help the algorithm push the video out to the people that need it. And without further ado, let's jump right into it. So if you're new to investing and you just started building yourself a little dividend portfolio, the biggest question on your mind right now is probably, how much do I even need to get $100 a month in my dividend portfolio? So let's jump into the numbers and let's do some simple math here. In order for you to get $100 every single month, your portfolio needs to generate you about $1,200 a year. So for the sake of simplicity, I do like to give you guys the layman's terms of these things because I know sometimes the verbiage and the jargon could get people confused. If you have a dividend portfolio that's giving you a 4% yield and you have a bunch of stocks and a couple ETFs in this portfolio, you basically have your own little index. This little index that you have created gives you a 4% yield. In order to get $1,200 a year off that portfolio, you're going to need about $30,000 roughly. So let me give you the calculation for you to do this on your own. If you want to look up some of these stocks and you want to see how much money you'll have to put in each of these stocks or ETFs, you'll find out exactly how much you need to give you that $1,200 a year or $100 a month. So you get the annual income, let's say $1,200 because you do want $100 a month. So $1,200 divided by the yield. So let's say the stock has a 4% yield, that's going to equal $30,000. That is going to be the amount that you need invested. So if you go on your calculator right now and you do $1,200 divided by 0.04, it's going to equal $30,000. You need a $30,000 portfolio that yields a 4% dividend yield in order to give you those $1,200 a year, $100 a month. You don't need the $30,000 today. In fact, with dividend investing, you could build this up over time and let some of the compound interest do the heavy lifting for you. And if you only have $500 or $1,000 to start, that's great. The key here is you need to consistently invest in your portfolio and reinvest the dividends. So if for whatever reason you wanted to tackle this thing head on and you wanted to get to $100 a month as soon as possible and you're like, hey, Johan, I need to get here ASAP, man. I need these $100. I never again want to pay for my phone bill. I want to eliminate my phone bill for the rest of my life. What are 3 stocks that you can give me or 3 ETFs? If you're a complete beginner and you want to get aggressive with this, I would say the most aggressive way you can do it that's still a little safe is go head on into the ETFs. So with that being said, 3 ETFs that instantly come to mind are SCHD, obviously one of my favorites if you follow the channel, VYM, and even JEPI. And if you're new to investing, you might think to yourself, Johan, why should I focus on ETFs? Well, I'll tell you. The wonderful thing about it is you can instantly diversify your money amongst dozens of companies or even hundreds at that. And you don't have to worry about losing sleep at night if one of those companies cuts their dividend. You have a basket full of companies. If one of them cuts their dividends, you're not going to even feel it. Now, if you did want a little more control and you did want to have a better grip on your own stocks and you wanted to build your own little index per se, your own little fund in your own portfolio, and you wanted to be the manager of that, that is your goal, your aspiration, let me give you 3 stocks for that. Johnson & Johnson, Pepsi, and Realty Income. Johnson & Johnson currently has a 3.34% dividend yield. They have a dividend growth streak of 52 years and they have a dividend payment streak of 54 years. If you want to talk about a sleep well at night company, this is as good as it gets. You don't really have to worry about them ever cutting their dividend or suspending their dividend altogether. And they pay their dividends in the months of March, June, September, and December. Pepsi currently has a 4.21% dividend yield. They also have a great dividend growth streak of 34 years, and they've been consistently paying that dividend for about 34 years as well. You can expect to collect your dividend payments from Pepsi in the months of March, June, September, and January. Now with Realty Income, you have to remember that this is a REIT, which stands for a real estate investment trust. The stock has a current dividend yield of 5.58%. And the cool thing about them is that you're going to get paid every month because they are a monthly dividend payer. So like I mentioned to you earlier, if you want to have $1,200 a year coming in from your dividend portfolio, which is going to give you about $100 a month, you're going to need roughly about a $30,000 portfolio that yields you a 4% dividend yield. So if for whatever reason you want to just YOLO this thing and get to this $1,200 a year, $100 a month, a lot faster with half the income necessary from a $30,000 portfolio, you can look at something like JEPI. From the date of this video being filmed, JEPI is currently giving you an 8% dividend yield, a little over 8% to be exact, 8.25%. You would need a portfolio of $14,545.45 in JEPI to give you $1,200 a year, which would give you the $100 a month. So with only half of the amount of the portfolio needed, JEPI will get you the $100 a month. It is a lot riskier, but if cash flow is your primary concern and you don't really care about being a little risky, that might be something you can consider. Now, I don't recommend you doing this. I don't recommend just throwing all your money into Jeppy, but if for whatever reason you needed to get your $100 a month as fast as possible, this is an option. And speaking about fast as possible, if you wanted to go even faster, if you wanted to go Mach 20, right? And you wanted to do this thing a lot faster, you can look at something like the Triple QI. Right now at the moment, Triple QI is giving you a dividend yield of 14.14%. It would only cost you $8,486.56 to generate $1,200 a year from the Triple QI. And when you think about it, that is pretty wild because that is about 75% faster than the $30,000 portfolio yielding a 4% dividend yield. And now, although I don't recommend you putting all of your money into these ETFs, just YOLOing it, I do say consider looking into them and maybe adding them to your bunch if you do want to speed up your dividends, because they definitely will help you speed up your cash flow on a monthly basis. So the cool thing about picking individual stocks for your portfolio to help get you to $100 a month is that you basically kind of get to cherry pick the companies that you want in your portfolio to help get you there a little quicker. By picking individual stocks, you get more control over your holdings. Like I mentioned, you're able to cherry pick higher dividend payers and you can build a portfolio that's tailored to your goals. My recommendation, if you are a beginner, start with some ETFs for simplicity and diversification, and then slowly start sprinkling in a little bit of individual dividend stocks as you learn more about the companies. So if right now you are currently at a position where you don't have much in your portfolio or you're starting completely from scratch and you're a complete new investor, let's talk about the timeline that it'll take you to get to these levels. So if you're investing about $500 a month and you have a dividend yield in your portfolio of about 4%, you'll likely get to your goal of $100 per month in about 5 or 6 years roughly. If you invest more money, you can get there a lot faster. Or if you can start with a lump sum of about $10,000 or even $20,000, you're well on your way to get there pretty quick. But here's the quick truth that a lot of people don't want to tell you and a lot of people kind of overlook. The truth is, this is going to take time. But man, look at yourself. 5 years went by already. If you would have been doing this for 5 years, you'd be a lot further along the way right now. The next 5 years are going to go by like that. Start now. Get your portfolio going. If you don't start putting money and deploying money into your portfolio, you're never going to get there. Start working at this thing little by little. It all starts off with one piece. Put one piece in motion and let the rest follow. So keep in mind, as you're doing your research to start putting your ETFs and your dividend stocks into your portfolio and build yourself your own little yield, look at the things that are necessary to get these calculations in place. You're going to put the number of the annual income that you desire, so $1,200, $2,400, $3,600, and you're going to divide that by the dividend yield of that stock or that ETF. And that will show you exactly how much you need invested to get to that outcome. If you got some value out of this video today, please do me one favor, hit the like button on this video. Also subscribe to the channel if you're not subscribed. If you do enjoy this content, come along for the ride. I am building a $1 million portfolio that I started from scratch a couple of weeks ago. I'm actually going to do an update on that portfolio in about a week. So if you like this type of content, man, subscribe to the channel. Thank you for coming and hanging out with me today. I will catch you on the next one. Peace.